few years ago, the combined Eurozone had the same GDP as the United States. It no longer does, because its recession has continued on for an extended period of time while the United States has been growing. And in 2015, we think that Germany, which has been the bright point, will decelerate. We're looking at growth of just about 1% and some really unattractive numbers in several other countries. We also think that Japan will have economic growth of just about 1% next year. And that, by the way, is sort of optimistic when you think about the fact that they've just reported 2 quarters in a row of economic contraction in Japan. So it's not a very happy, robust picture out there. There are a number of countries that are looking a little bit better. Korea, for example, South Korea, Australia. But the size of their GDP is not necessarily large enough to pull the rest of the global economy along. And the country that is now the world's second largest after the United States, single largest, in terms of GDP is China. And there are issues, too, about Chinese economic growth. We have a forecast of about 7% real GDP growth for China in 2015, maybe a little bit less than that. We are well above the consensus. Now, I will say, who knows what the Chinese growth numbers really are? There are questions about the transparency of the data and so on. We do all kinds of bean counting. We look at how much electricity is being generated and used. It's usually very well correlated with the actual pace of economic growth. But even so, what we know is Chinese economic growth, which for years was powering ahead at 10 to 12% per annum, has moved to something notably slower, 7%. Europe would be thrilled with half of 7%. But it's something that we need to watch for, because for many investors and economic analysts, the presumption for the last several years had been that China was going to do extraordinarily well, that Chinese growth was going to power growth in a number of other places in the world, not only East Asia, and would be very important to the financial health of a number of industries, including energy, including metals, all of which are important for the build of the Chinese economy. And of course, one of the reasons we are seeing the weakness in commodity prices now is because of the slowdown in Chinese economic growth. Impact on the United States? Well, if the rest of the world is not doing so well, what about our exports? We do most of our foreign trade within North America, with our neighbors to the north and the south, Canada and Mexico, and the United States. We really are a significant regional trading bloc. And by the way, I'd point out that the currencies haven't changed very much. In fact, I would dare to say that if I asked people in this room if they knew how the Mexican peso or the Canadian dollar were trading relative to the US dollar, most of us really wouldn't know. But we pay a lot of attention to the other more senior currencies out there in the world. And when we look at this slide and think about the slowdown in Europe, this is of consequence to the US export picture, because outside North America, it is Western Europe that is the US's largest trade customer. I didn't say trade partner. Our largest trade partner is China outside of North America, but it's not a huge trade customer of ours.